making money through a business is extremely risky.
Unfortunately, I've seen a number of people go under and they're losing everything through bad decisions or lawsuit, or customer goes under, they've got a massive debt to the ATO. You come across some situations where you go like, well, what happened here? Where was the advice? Where were the accountants?
You invited us to come up to the Bend Motorsport Park, and then I'll never forget it. Me and Steve drove home depressed. Happy for you, but depressed.
Yeah.
And then we're like looking at this brand new red Ferrari getting flogged around the Bend, and we're thinking, geez, I wonder who's got that. That's pretty awesome. We were standing on the pit wall and you rolled into the pit lane driving this Ferrari, and me and Steve were just like, why is he driving this Ferrari? They're like, he stole it, and who owns this Ferrari?
And the brakes are just...
The brakes are on fire.
Yeah.
They're like, literally, you get out in your race suit and you're friggin' Mark Winterbottom or Shane Van Gisbergen. And we're just like, what the fuck's just happened in the last, like, what?
Yeah, I think some of the situations I've had recently, you just go into a spin, and then a week later, it's all kind of, the truth actually comes out. And it's like, why did I waste so much mental energy on this? Oh, why did I buy into what I heard?
Yes. I think I remember too, yeah.
I think it's PTSD after trying to, you're trying to scale up a business over all the years. You just end up kind of jaded.
Yeah.
Where you're just like, I can't handle any more of these battles. I'm a bit broken. I just need a cuddle.
On the podcast today, I got Mike Wilczynski, who's the Director of National Accounts, and he actually happens to be my accountant and friend, so thank you, mate, for joining us.
Pleasure, lovely to be on.
I'm going to obviously start it with, this isn't financial advice or anything like that. It's just a general chit-chat, but some of the stuff they ask where you're just like, fuck, yeah, some of these things I don't even know.
I think I've said to you in the past that a lot of this is an education exercise and bringing people's knowledge up to a particular standard. Or it's, you don't know what you don't know, and this is why engaged professionals kind of do the work.
Yeah.
And it's kind of hand-holding, and it'll take a long time, or it takes, you need to know different things at different stages. You don't need to know everything all at the same time. So... yeah, it just kind of depends on what stage everyone's at. You look at your journey when you started out to, getting apprentices, to getting staff, to then, moving into a new warehouse, getting more vans, expanding the business, and as to how it's grown, as to, you didn't need to know every single piece of the puzzle when you started and how all the tax and structuring had to work. But as you evolved, everything's kind of evolved with it.
Yeah. And actually, my mate, Kingy, who I had on the podcast a few weeks ago, has a good point, which is probably good for a lot of these people asking these questions, is his advice to me about a lot of things has been don't DIY, just can pay good money to the right people to do the shit you need to get done properly. Yep. He's hell anti-DIY in his business.
Yep.
And it is true. I mean, you have to get to a point, obviously, where you can do that, though, where you've got enough capital or whatever, or cash flow to be able to pay the professionals to do what they do, to give you the results that give you 10 times what you've invested anyway. I think that's a good lesson for some of these people, hey?
But I learned that lesson a long time ago. This is why, whenever something goes wrong, I'm like, Matt, can you send one of your guys to have a look at this? I'm like, I'm not going to touch it. There's no point me trying to do a half-assed plumbing job on something. Yeah. I could go to Bunnings and buy the gear, but some things you shouldn't do yourself.
Yes.
And I've learned that probably about 10 years ago, and I just kind of gave up in terms of trying to fight it, because it was like, I'll do my own oil filter on the car, and I'll do my I'll try and service things myself. I'll try and do these little jobs, and it's just even drilling holes into the wall to mount picture frames in our house. I'm just like, you know what? I made an absolute dog's breakfast in the previous house of doing that, and the wife just told me, you're not touching a drill again, and we're just going to get a professional to do it, because they do a much better job. The holes are a hell of a lot smaller, and they've got the right gear to do it.
That's a good lesson to start off the bat. Well, I'll start, mate. Can you maybe just start with a bit of your background for people? So, after school, you started at uni. Maybe we could start from uni. Is that all right?
From uni, yeah. Okay. I was always really good with numbers. It was either engineering or finance for me. So I chose the numbers side of things because I was always kind of interested in terms of how businesses functioned, what was actually going on behind the scenes, because I had a big interest in shares and the stock market. So I just wanted to understand, like, why the hell, like, how does the balance sheet work? How does the P&L work? So I thought, you know what, like, accountancy is going to be the best degree because I couldn't get a job as a stockbroker, or like there weren't any jobs in Adelaide as a stockbroker. I'd have to move to Sydney or Melbourne. So I just went down the natural path that was kind of like going to get me the knowledge that I needed, but also get employment at the end of the day.
Yeah. So you studied accounting, and then what happened after that when you completed the uni?
Got an undergrad position with William Buck, really good firm, mid-tier firm, and jumped ship. Essentially started working whilst I was still studying, and you suddenly realise that what you're being taught in the uni degree doesn't actually. I realised that it didn't really apply to the day-to-day of what you actually need to do. So there was I learned a lot throughout that journey, and they had a lot of training going on for their staff, and it was a great experience to kind of work in a decent firm that kind of upskilled you as you were kind of trying to mature.
Yeah, and then you started national accounts. When was that?
Nah, it was a bit of a journey. So I kind of became the secondee specialist, where they would send me out as financial controller or finance manager when one of their clients lost their internal kind of staff member. So whilst they were trying to recruit, that they reached out to us, they would send me. So I just hit the ground running a finance team and trying to clean up their figures and run their operations whilst they were trying to look for a permanent replacement. So that went on for a number of years. I got kind of bounced around to a number of different organisations. I think I spent about 9 months at BAE Systems, putting together their Australasian accounts to feed into the global entity because they're listed in London, which took ages. The numbers were crazy. Yeah, but it was a really cool experience. Then I got sent off to another client called Osmoflow. They were Australia's largest desalination plant manufacturer. So I was kind of there from when the company was doing about 25 million to about 150 million. So it was a really cool journey. Throughout that period, I ended up jumping ship from William Buck to Osmoflow directly because I was driving out every single day. Like it was, a 6-week engagement turned into 6 months, and I'm kind of like, well, okay, I should probably just get employed directly. Yeah. Then I did that for about 5 years. Got a little bit political, and I just wanted to do something where I was kind of helping people and just getting my hands dirty rather than playing politics within a larger organisation. So kicked off an accounting firm.
And what year was that?
2009, 2010.
Okay. Yeah. How old were you then? 20s? No. Yeah. Surely.
Yeah. Mid-20s. Probably 25? Yep. Yeah. 26.
And what sort of people do you work with right at the moment? Like what sort of companies and people is generally your clientele?
Mainly business owners and entrepreneurs. So people which have stuff going on. Kind of started out doing I-returns, like income tax returns when I was younger, built out a pretty good website, and there were plenty of leads coming through on that side when, in the early days. And then it kind of all evolved as my knowledge improved and my network's improved. It's now kind of shifted to be more, the more technical, more specialist in terms of, trying to help business owners navigate, their personal lives, their wealth strategies, what they're doing within their businesses so that it's optimized for tax.
You seem to strike, I know you pretty well, but you seem to be a type of bloke who definitely, would you say you push the envelope in regards to the accounting You know, because you have these structures and stuff that you can come up with where most people will be like, even other accountants are just like, what the fuck is that? You know, so is that pushing the envelope, or is that
No,
you're
it's
just better educated, or what do you
just
put that
better
down to?
educated. There's nothing like special going on. It's better educated and trying to make sure the structure's fit for purpose for that person's situation and what they're doing within their business. You know, unfortunately, I've seen a number of people go under over the years and helped them throughout that process where, you know, they're losing everything and through bad decisions or lawsuit or customer goes under and, you know, they've got a massive debt to the ATO, you know, and then they're being dragged in or like they're going under as part of the process and their structures are terrible. There's no sophistication around it. There's no asset protection strategies. Like they haven't segregated the operating businesses from their assets, from their wealth creation. You know, homes and investment properties are in their personal names. It's you come across some situations where you go like, "Whoa, what happened here? Where was the advice? Where were the accountants? Where didn't no one look at the situation and the risk profile of what they're doing?" You know, construction's quite risky.
Yeah.
You know, it's not one of those industries where, you know, if you're married and you've got a house, that you actually want to be on the title. You know, that should probably be in your partner's name so that it's segregated from you being a director of an operating entity which carries a lot of risk. You know, so you think about some of the contracts that people carry. If you don't get paid or you get slapped with liquidated damages and it starts to get a little bit hairy, you know, what's the structure behind you to try and at least, I'm not saying that it's going to like avoid paying creditors, but it's like, what's the structure which will at least stop the damage?
Yeah. And that's one of the questions I was going to ask you down the track, but like, it's bloody important, like for a lot of guys who are going out on their own, starting off on their own, to get like a lot of these, like they do build over time, but to start, you know, do you have any advice around those people who, you know, everyone wants to start off as a sole trader, but like,
it is the
almost feels
simpler
like,
structure.
Yeah.
And I do recommend, like, when most people kick off with a sole trader business, there's legislation which allows you to roll that business into a structure without paying any capital gains. That legislation's been around for probably about 4 or 5 years now. But it is the simpler and cheaper structure to operate. Once you hit a particular turnover, for GST purposes, it's 75,000. But then probably from a tax perspective, you'd probably go like, if you're making more than $120,000 profit, you know, you may want to then start looking at, you know, operating through a company structure. Then you start to get a little bit more sophisticated where you might have an asset entity. And, you know, as things grow and as things get a little bit bigger, you know, all the advice starts to evolve and change. It's not always out of the box, but it's kind of just being aware of what people are doing, what their intentions are. And, you know, some people might be a little bit more successful operating that business versus others. You know, it's like trying to grow a business in a, you know, around construction and trades. It's not easy. There's a growth profile where you kind of jump out and you're kind of a one-man band. Then you start to get apprentices and other people working for you. Then it starts to kind of get into like no man's land where scale costs money. And that's, you know, when do you hire that admin person? When do you go out and get a, you know, commercial warehouse? Or when do you start to do all those sorts of things? And how does that look? And how does your risk profile look as part of that journey?
I want to jump back to something in a minute, but while we're on this, I have a lot of people who hit me up about like they want to go into partnership with their mate. What is your you know, historical evidence with like partnerships succeeding versus not succeeding? Because the way I understand is like a lot of people want to go into a partnership that's 50-50, and then you're like, well, who can make a decision if one person wants one thing and the other person wants another? There's no way that you can make like a legal decision because you both have literally one. There's 2 shares of the company. One has 1 share, the other has the other share.
Yep.
What is your thoughts on partnerships? Is that true?
Personal experience says I do not recommend it. I've been in a few different accounting partnerships and different business partnerships, and they've been challenging, and they haven't worked out well in the past for me. So from an advice perspective, what I would say is there's a really good book which I recommend people read called Slicing the Pie, and it's about how to kind of how to split up the profits or recognize the efforts, capital the people are putting in, and to try and get something which is actually going to be relatively fair within a framework which people can understand and agree to. So yeah, I would definitely recommend
Slicing the Pie.
Yeah, it's a great book. Really easy read. It's not heavy reading.
Yeah.
But the concepts in that are great for being able to kind of go like, well, if somebody needs to put in X amount of cash, well, they're going to get a return out of the business based on this.
Yeah.
If somebody needs to put in X amount of hours every week, well, they'll get rewarded like that. And this is how we're going to try and divvy up the profits. It's a different way of looking at it. Rather than a traditional like 50-50 split. It's actually trying to recognize the efforts which are going in, the capital which is going in, the knowledge and the experience that goes into a new venture. And it's been very well written.
Okay. Because, I think maybe the partnerships thing tends to be almost like the easy way out and to start, and they just think like, oh, I've got a mate who's a plumber as well, and, we're going to go 50-50, everything's going to be fine. And then, when you go along and you speak over the years, like, I spoke to that lawyer the other day about stuff we're setting up. Yep. And he's like literally specializes in, or essentially one of the things he specializes in, what he was saying is that he specializes in setting up these structures and asking people the questions when they like each other. And that was the way he literally put it to me. He's like, I'm going to ask you a whole bunch of really strange questions. You're not going to know where I'm going with them. But I'm asking you these questions while you and your partner actually like each other, because I can't ask you this stuff when you don't like each other anymore.
Yeah, it's a divorce agreement. That's what you're trying to get set up for, in terms of if you go into a partnership or whatever structure it might be, but or shareholders agreement. It's literally supposed to be more of a divorce agreement, because you're only really going to refer to the paperwork when things are going really badly.
Yeah.
If everything's going really well and everyone's making money and everyone's happy, that's when everyone's happy. But when things get tough, that's when you start to see the true character of other people. Yeah. And I definitely recommend that people go see a professional if they're going to enter into a partnership, to try and get the terms as to how they're going to extract themselves out of the partnership first, because dividing up a lot of cash is easy. And
most people at the start, from my experience, just can't see more than 6 months into the future, so they don't understand that there's a pretty good likelihood that we're going to have a disagreement at some point. They're just like, nah, it's my best mate. We've been best mates forever. Yeah. And you're like, yeah, but the writing's on the wall, man. Maybe just get it sorted out now while you like each other.
Yeah, but your mate's partner might not like you. So then that'll create a tension. They might have a health issue. What are you going to do about that when they suddenly drop out of the business for a few months?
Yeah.
Like there's particular things which will happen, and you need to be prepared for life to hit a business. It's all crazy that we pretend as if everything's linear and it's going to keep going. Yeah. But, life isn't like that.
And essentially that's like, it is, and I think what probably puts people off doing those sort of agreements at the start is like, yes, it's a $5,000 investment or whatever, and it hurts at the start, but man, it could save you like so much more down the track, because you got one chance to do it really, and it's at the start.
I've lost a lot of money in some of these ventures, and I'm very gun shy to enter anymore.
Yeah. Can we actually? I wanted to. We spoke about this. Was cool to talk about, but I've just got a really interesting story, and I'd like to give it a bit of a background, because from what I know, and then maybe you could elaborate on it. But I'll never forget the time when me and my other mate Steve. You know what I'm going to talk about. We came. Yes. It must have been just before COVID, and we knew you were doing really well, and we'll talk about the other stuff that you're into in a minute. But you invited us to come up to the Bend Motorsport Park, and we were like, all right, sweet. Yeah, we know he's got a track car. You know, you had a Lancer, which was pretty cool.
Still got it.
Still got it?
Yep.
Yeah. And we were like, all right, sweet. We're going to see him drive around the Lancer. And then I'll never forget it because me and Steve drove home fucking depressed. Happy for you, but depressed.
Yeah.
And then we're like looking at this brand new red Ferrari getting flogged around the Bend, and we're thinking, geez, I wonder who's got that. That's pretty awesome. And then we were standing on the pit wall, and you rolled into the pit lane driving this Ferrari, and me and Steve were just like, why is he driving this Ferrari? They're like, he stole it, and who owns this Ferrari?
And the brakes are just...
The brakes are on fire.
Yeah.
They're like literally smoking, and some dude gets in the car. This guy who I find out's your mate, he takes the car off you. You get out in your race suit, and you're friggin' Mark Winterbottom or Shane Van Gisbergen, and then you hop in another car that he's prepared for you, and you take off again. And then we're just like, what the fuck's just happened in the last, what? Yeah, so can you maybe, it's a really good story, and it's just got some good lessons in it. So I want to see if you could maybe touch on the other thing that you're passionate about, which is the trading, and then that period of your life, which was really cool.
Yeah, I was doing a lot of options and share trading at the time. So, yeah, it was at the time, that's the key part. I got absolutely flogged during COVID and lost a lot of money. But before that, it was just kind of silly money. But the analogy which comes up when you're kind of doing options trading and you're selling a lot of puts and calls is you're kind of picking up pennies in front of a steamroller. Like it's all good when it's going well, but when it turns, far out, got absolutely spanked.
Yeah.
Throughout it, but it's still one of my passions. I still do it, and I'm still kind of digging my way out of that hole, which it created back in COVID times. And it's been 3 years, so I'm still digging, but making progress. I've changed my strategies. I've got a developer which is helping me write some really good systems and helping to identify opportunities, and I'm still passionate about it. Like it's kind of I don't know what it is. It's kind of like gambling. It's glorified gambling, but you try and create an edge. And I feel as if I've done it probably now for about 20 years that I've got enough of an edge to be able to do this long term without blowing up.
Yeah.
But it's been stressful along the journey. And,
So essentially, you got to a point where you said silly money, like you were just
silly
killing
money.
it in options and that.
Options land, it was a bit like 100 grand every month profit.
Yeah. And you were like
over and over and over. It's just like, wow, this is creating like some major tax liabilities for me.
yeah.
That they disappeared that year. But I was like, oh, geez, I've already pushed over $1 million in profits within the first 7-8 months of that year. So it was just, it was getting silly. And I'm like, well, I might as well treat myself.
Yep.
And an opportunity arose where one of my mates was selling their 488. It had about 3,000 clicks on it. I'm like, I could actually turn this into a business. You know what? I might get a dealer's license. I'll have a chat to my mechanic and we'll set up a vehicle dealer business and I'll just buy it in that. So went down the path, put it all together, and I was like, oh, great. You know, I'm just going to keep doing this. Cars are cheap.
Yeah.
And the market, the market's good. I'll get to, create a wholesale business for cars. Little did I know what was about to hit.
And so can you explain what did hit, and I guess also what the good lessons are, because I think we've spoke about it in length before, and it's just really cool to hear, someone who's been through the absolute adrenaline, I suppose, and like the roller coaster ride of just feeling like nothing could ever go wrong.
Yep.
And then, Ferraris and all the stuff and the houses and whatever. And then it sort of unraveling and what you learned along the way.
Yeah, the unraveling. That was it happened so fast that it was difficult to fully comprehend what was happening during the moment. It's taken a few years of reflecting back on what actually transpired to really comprehend it, because there were a lot of emotion involved. Because you kind of go like, oh, I've got the shiny red thing, which I was looking to kind of trade to drive and to sell, and then you kind of go, oh, I'm now a forced seller. I'm not selling it based on, oh, I can kind of hold it and sell it on the terms which I want, I'm like, oh, I'm actually now desperate to kind of sell it because it's burning a hole in my pocket from a cash flow perspective. Fortunately, I kind of got out at break even, which was great. But then you kind of look at the price of those cars now and you go like, oh yeah, it's 380. What was it? Yeah, 380 to now it's like, well, you can't pick one up for less than 470.
Yeah.
Oh, shit.
Yeah.
Like, you know, if you've got a long enough time frame, you can probably get your way out of most problems. But if you don't have the cash flow in a long enough time frame, then you got problems. And you know, that was a powerful lesson throughout that journey. The other lessons were that you're diversifying your investments across different kind of asset classes as well. Because I had pretty much 90% of my wealth in options land and share land. And that was way lopsided.
Yeah.
It kind of, I'm like, oh, I shouldn't really be putting it in anything else because the returns are just so good. But just because the returns are so good doesn't mean you should be parking all your cash into one asset class.
Yeah.
And yeah, I should have been a lot far, like, you know, I do accounting. I should know, I should have kind of picked up that I'm really way too exposed in this. But, you know, who would have predicted COVID?
What do you think that came down to? Was it just like a mindset you got into that you couldn't see the wood through the trees? Because you're a smart bloke and I'm very smart. And I'd say, were you caught up in some sort of emotional thing where you couldn't see that what you were doing, but in hindsight, you're like, wow, that was the dumbest thing ever? Do you know what I mean? What do you think?
I think the returns were really good. And I thought even if there was a big downturn, I'll still kind of get through it. And I managed to save my personal accounts because I've managed to put enough protection in just to kind of stop it. So it still gave me enough to continue to be able to trade and do what I enjoy. But yeah, not enough of a buffer. I could kind of see that there was a problem in the markets and I was reducing my leverage, but I hadn't reduced it far enough. So yeah, when you're playing with toxic waste, which is, you know, highly leveraged instruments, which can go against you, you need to be really careful.
Yeah.
And I wasn't running proper risk protection across my portfolios, and you know, you get bitten.
How did you, in that period? I know you've had some pretty dark days, as you would. Everyone does, but especially going through that. How did you also concentrate on the business? You know,
It was difficult, extremely difficult. I think the thing that kept me going is like, I enjoy helping people. I enjoy talking about what I do. And assisting people along that journey. That kind of just gets me up every single day.
Yeah.
You know, if I didn't have a passion for that, I should probably be doing something different.
Yeah. You just spoke about the, I wanted to ask you this question because it's something that's on my mind. It's more of a selfish question as opposed to for other people. But you said about, like, you know, you can get too leveraged and get all your too many eggs in one basket. And I've been, you know, realizing now from some of the courses I'm doing and people I'm hanging out with, and that is it fair to say that making money through a business is extremely risky, and most good operators I know would be usually trying to get to a point where they're actually removing the money out of the business into more stable assets. Like, that seems to be what the good operators do, is like they have a business that turns over money, but they're also always making sure that they're pulling out of the business and then like putting it into commercial property or whatever it might be. Is that fair to say? That's, you know,
it depends on the stage which you get your business to and how far you want to push it. You know, I talk to business owners all day, every day, and you know, some of them want to keep growing it and turning into a behemoth in terms of like they want the entire vertical within their industry segment.
Yeah,
nothing wrong with that. Some people want a comfortable lifestyle and are just a stable cash cow. Nothing wrong with that. It all depends on people's relationship with money, and everyone's different. So I'm not here to change their relationship with money because that's just way too hard. That's, you know, however you got brought up is going to be how you're going to kind of function, what your relationship's going to be like with it. So you kind of need to understand that as a kind of a core drive of how people will behave. And once you kind of identify how they look at the world, is then, try and enable them to be able to, yes, diversify and put into this sort of investments that they're going to be comfortable with, that they're going to be able to understand, and they're not going to be losing sleep at night.
I think the understanding part's big as well, because I've always had I've always wanted to do shares, but and for no other reason than I think it's cool. But it's like, I don't understand shares, so it's like, yeah, it might be a good vehicle, but at the same time, like, yeah, I think it is important that you're putting your money into something you understand. And I more understand like property, like physically looking at it, building it, whatever. So I think that's an important thing, is like, I used to get caught up in like wanting to do what was sexy.
Yeah. And the other part of for most business owners, I kind of recommend that they reinvest back into their own business to try and create some more time. Can you get an admin to help you do all those other aspects which you don't like doing? Where do you add the most value within a business? It's trying to get the interplay between, are they still passionate about what they're doing? Can they scale it? Can they get it to the stage where they're enjoying their baby that they've created from scratch? And what does that look like?
Do you have a lot of people that you see, then you work for and work with, that have this I think it's a problem everyone has, but I'm sure there's companies that are sort of maybe like a bit immune to it because maybe they have huge gross profits or whatever, but the scaling of a business just costs people. That's one of the common misconceptions people don't realize, is like, when you're growing a business, it's like feeding a beast, man. Like, it just costs so much money to scale.
Yep.
There's no way around that, is there? Like, no.
Nope.
Damn it.
There is no shortcut.
But that is what one thing people don't understand, is it's like, you just burn money growing a business, isn't it? And at some point, I think that one of the tricky things, going back to like people who want to have the whole vertical, is that, at some point you have to get to a point where the business starts feeding you back again. And it's hard to know when, like, do I just keep pouring all my money into this business, and one day in 10 years time I could have 500 employees? I don't know. It's like, I guess you got to know the end game a bit, don't you, to know?
Yeah, it depends what stage you want to scale it to. Like, you could try and scale this to 500 people. Do you really want to? Do you have the skill set to do it? And is that what you ultimately want out of the journey? You can reinvest every single dollar back into it and just keep going. That is what some people do. Other people prefer just to have a lifestyle, spend more time with their kids, go buy yourself a camper van, and off you go into the hills.
Yeah.
Everyone's different.
Yeah.
And everyone approaches it differently, but from what I see, most people don't put enough money back into their business to kind of get that scale. They'll go for the shiny crypto investment or shares or some other stupid thing.
Yeah.
Rather than try and give themselves more time. And I think if people put more money into giving themselves more time, they'll make better decisions, and they'll spend more time with family doing things that they actually enjoy rather than spending it at work.
That's good advice. That's going to get cut into a clip, that one, deadline. I'm going to get shortly onto, because I know you don't have all day, but
I've got to pick up my son.
Oh, okay,
so that's our only hold up.
This podcast is going to go for another 4 hours then.
I think my wife will kill me.
I got a bunch of questions in my phone I want to hit up from some of the guys, but
yeah, sweet.
Could you say, I know you work with some really good operators in the trade space, could you, is it probably hard, but could you summarize some of the commonalities that you see across the guys, especially in the trade space, that run, really successful operations compared to the people that you see that struggle? Is there anything that's common between those people?
Work ethic, boundless energy. They have a particular drive. They have a particular worldview that just, they get up, they love it, they do it every day, they fight the fight. They don't tend to compromise on quality at all. It's energy, quality, and they've built a good team around them, and they've motivated that team to help them achieve the mission. Whatever that mission is and whatever that particular segment is. But it's trying to find that ball inside you which drives you, and you're kind of passionate about trying to achieve something that you can do it day in, day out, day in, day out.
Yeah.
That you just grind everybody else to a pulp because you're just going to outwork them.
Yeah, that's what people don't like. That's just the thing, isn't it? It's like you can't get around the fact that you just got to work hard, man. Like for a long period,
There is no shortcut.
there's no shortcut, is there?
Not in this, not
even
in this
options.
industry sector. Yeah.
Not even options trading.
Nope. So you got to outgrind. It's like you got to outgrind people and survive. And then, in 20 years later, you might be able to crack the nut and figure out what the hell you're doing.
Yep. What if,
Overnight success.
Which
has taken 10 years.
Exactly. CFOs. I've got a fella I'm mates with, Sam Ackland, and he's got a reasonable sized pretty big company called Build Clean. I think he's got over 100 staff.
Yes. Yep.
And he said one of the things that really changed for him was he got a virtual CFO in the company, which I guess is like, the way I understand it, it's like someone it's like a board director, I suppose. They come in, they give you like totally unbiased advice. I feel like this is another selfish question. This is a podcast mostly about me, just so you know.
Yeah, that's fine. Yeah, it works well.
At what point, like, this is probably a silly question to ask, but at what point do you think that becomes a viable option? Like, because at some point you need someone keeping you accountable, I reckon, outside of the business for your decisions to some point. Or is that dangerous?
It's probably more of a business coach.
Yeah.
Is probably a bit different. In terms of accountability, CFO is, Chief Financial Officer. They're there to guide you through the financial landscape of your organization. And it depends on what you're trying to do with the organization and the complexities. I just saw a client in Melbourne, and great running business, but there's no CFO, and they're doing really well, but the financials don't tell a story. I think what a really good CFO does is help kind of paint the picture using numbers.
Yep.
Like that's essentially their job, to help everybody understand what's actually going on in a business, and like push the highlight particular numbers so that attention gets drawn into particular problems or opportunities.
Yeah. Okay. Well, I might get onto some of the questions now that I got from people. When would you, and this is not, I'm going to put at the start of the podcast, this is definitely not financial advice. It's just a general chat between me and you that you can take either way, but we're not financial service providers, or we don't pretend to be. So this is not financial advice. This is actually something that I've been, going through now, as you know, bookkeepers versus accountants. Can you explain what a good bookkeeper does, and then how that sort of flows onto the accountant, and at what point does it make sense to get a bookkeeper for your business?
Bookkeepers are probably somebody which you would see every week, every fortnight, at least once a month, to help get the quality of financial data in your accounting system up to a particular standard. An accountant you would probably talk to, once a quarter, half a year, or once a year, to just have a look over it and kind of put the higher level strategy together. Two slightly different beasts.
Yeah.
And used for different, used to deal with different situations.
Okay. One thing that was interesting, because I had that problem with the, I was trying to go through what I could offload. And one of the things I felt like I wanted to offload was paying the bills. Yeah. And then we had that good chat, and you said something to me that always stuck, was one of your friends who owns that massive construction company in Adelaide. And he's a very good operator. You said to me that, you've seen him sit on a plane, you've been next to him on a plane, and he's physically signed off and paid like 300 invoices on the plane. Yep. And I was trying to think about how I can get around paying invoices, because it's like the bane on my existence. But what could you say? That's very hard to let go of, isn't it, as a business owner? So what would be the normal process around like accounts payable, the best, it's a tiered approach, isn't it?
Yeah, it is. So that gets prepared by the internal finance manager in terms of the entire document, the summary, and everything's provided. So it's all quite transparent in terms of what's actually getting paid. They've uploaded the file, so in terms of into the banking system, so it can be released easily, or each of the lines which gets ticked can be released easily. And it's kind of like a safety net, where it's just that extra little bit of checking, because as the business operator, you should really know what's actually going on every single time. You know, you should have your finger on the pulse in terms of what's going through the business, unless you've got like a CEO or general manager, which is doing that for you. And you're kind of then stepping back and looking at the management reports, which are coming through on a weekly or monthly basis, or however often you want to see them.
Yeah.
So, yeah, it's you kind of got to figure out where you add the most value and where you stop the most, was there any fraud risks, or how you minimize risks occurring within a business. So it's everyone's going to be kind of unique, and I kind of went through a similar exercise where and how do I provide the most value in terms of my own organization, and what stuff do I need to get rid of, which I hate doing.
Yep.
And it's a really good exercise to do, because then that tells you who you're going to be hiring next.
Yeah, that is a good exercise. Yeah. So just quickly back on that, do you think that the fact that this fella, your mate, was physically going through those 300 things on the plane, that's just always stuck in my mind, 300 invoices, do you think that's more around the fact that he is like, you know, likes to be control everything, or do you think that's just actually what really needs to happen in a company even of that size? It's like he really needs to be pulling the trigger at the end, or he's the last point that actually releases the money, and there's no real way around that.
There's no real way around that. Yeah,
Okay.
he's the last point.
Yeah.
Even when I was working back for larger companies, you know, I'd be preparing that and sending it off to the managing director.
Okay.
And it's not that he would know every single, or to the CFO or finance, or to a particular person that would release those funds. It's not that they're going to know every single invoice, but they're just going to ask questions regarding particular invoices. They might just do a sample. So they might pick out 10 invoice out of the 100, and they just might ask some questions about it.
Yeah.
And, you know, usually my job was to actually convey what was going on with those invoices, or go find some more information. It was just another sanity check to kind of just stop any fraud occurring.
Yep.
When you've got 400 staff on your books, it's, you know, it's easy for rats and mice to kind of do things.
Yeah.
So you just want to kind of like, oh yeah, I'm gonna keep an eye on you.
100%. This is a very, very, I guess, basic question for guys starting out is, at what point would you look like to have an accountant first going to H&R Block? You know, this is actually some of the questions that are legit that guys are worried about. This one came from Luke, so...
It's a good question. Look, H&R Block do a great job for mum and dad sort of tax returns. You know, that's what they specialise in. And most accountants that you're going to come across specialise more in dealing with businesses, or they should, because that's where the complexities start to come into play.
Yeah.
When you're actually running a business and trying to optimise your personal situation and the business situation, the two different sort of arms. Like as a sole trader, whatever profit you make, you're going to get taxed on. That's the strategy. You know, you don't need to talk to me.
Yeah.
It's I can't add a lot of value to that.
Yeah.
It's when you start to get into a bigger level with more complexity, more risk, and you've got more things going on. That's where you want your personal situation kind of explored, so that it's actually you understand what's going on, and then you've got someone which actually understands your situation as well to be able to help you throughout, you know, whatever your journey is going to look like.
Yeah, and I reckon that's another misconception. That's I'm numero uno for that. Is like, I always just keep thinking to myself, like, there's got to be a way I don't have to pay this much tax. But you know, and you always just say to me, mate, if you make money, like, it's only so much you can do. Like,
there's only so much you can
tax.
do. If you're paying tax, you're doing well.
Yeah.
So you want to be paying some tax because it means you're doing well.
Because I think that there's a misconception that like
The
these
more the better.
big companies have got that many crazy like structures going, they don't pay any tax or something. You know, I think that trips down from like the Googles of the world and whatever.
Yeah.
They all pay. We can't get away from that, can we? Like, if you
The Googles of the world pay too much to the Big Four to get around to certain things, which I've never been a big fan of. You know, you look at your Google invoice, it's coming from Singapore, Ireland, and, you know, the money's leaving the country. But the vast majority of companies which are operating here, you know, they pay their taxes.
yeah,
So it's kind of ill-conceived, some of the arguments which get made in the media about that, you know, they're avoiding paying taxes. Some heavy industries, you know, that you look at the BHPs of the world, you know, to develop a mine is going to cost a few $1 billion. There's a lot of heavy equipment. There's a lot of capital assets which need to to be invested in, they're going to have some losses, which they might be able to offset. But nowadays, they've used up all the losses and they're paying massive taxes, massive dividends to investors, and it's more like those tech companies which are probably screwing the country.
Yeah, we sort of spoke about this before, but I spoke to my friend who owns a big was a partner in that big liquidating firm, and he was saying that the ATO is suddenly chasing a lot of like directors now, whereas they weren't before. Is that something you're seeing?
Yeah, definitely. I'm seeing a lot more activity. Payment plans are getting a lot harder to actually get across the line. I tend to, the advice which I give to a lot of business owners at the moment, is, if you're really struggling, you're better off calling the ATO yourself, because they're going to be a bit more lenient dealing directly with the owner or, one of the owner's staff, because they traditionally just want to hear from you guys. When an accountant gets involved, obviously we're still going to talk to them and try and put our best foot forward, but it's not going to be as easy for us to be able to get you more favourable terms.
So you reckon they've really tightened the leash in that respect in chasing?
Yes. And now there's a bit more of an approval process. We used to be able to get remissions relatively easily in terms of interest and penalties. Now it has to go through an approval level.
Okay. What is a director's notice? Is that what it's called? Director's notice?
DPN, director's penalty notice. It's when you've been late in lodging and then you haven't really made any effort in terms of paying down your debts. What it does is, if you're operating through an entity, it changes the legality of that structure and makes you personally responsible for the debts. So you've essentially destroyed having a company structure or trust structure or whatever it might be, and you've been made personally liable for GST debt, pay-as-you-go debt, or the income tax debt, whatever it is.
Okay.
And
they weren't really chasing this stuff during the COVID period. That's like,
no, nothing was being issued. Nothing was being issued during COVID. It was 3 years of peace and quiet.
What do you think's caused that trigger to sort of be pulled, that they're suddenly like, no, we need, bang, let's go for it?
I believe there's about $50 billion worth of tax debt outstanding to the ATO at the moment.
Okay, that will do it.
I was reading something in the Fin Review that was like $5 billion of it was to do with some sort of TikTok scam where people were claiming GST refunds for expenses which they never incurred.
That's right.
So, first time I kind of read about it, I'm like, this is like the dumbest sort of scheme that you could be running, claiming GST refunds for costs which you never incurred. Like, it's just stupid. You're going to have to pay it back.
This might be hard to answer because you'll be biased, but what would you say to fellas? Like, what do you look for in an accountant? Because that's a legit question. A lot of these guys, including myself, would be like, okay, I'm at the point where I need an accountant. Fuck, where do I find one? Who do I look for? Who's gonna, you know what I mean? Do you have any advice around that for?
For most people, referrals. Talk to your friends, ask them. Who would you recommend? If they're recommending the same people, then you should probably go with them.
Do you think from a trade point of view, there's people that more operate, specialize? Do accountants specialize in areas like tradies or anything, or is it just all pretty general?
Yeah, I kind of don't agree with the kind of specialist thing. You're better off covering a number of different industries because you kind of get broader exposure to what everybody else is doing rather than just being like purely trades. I've got a variety of different industries. Sure, a lot of it's still construction, manufacturing, trades. But then I've got software companies. I've spent a lot of time in startup land. I used to be CFO of a company called Innovise, where we're commercializing new technologies. Helped list a couple of companies on the ASX. You kind of want a broader experience because that kind of, obviously I'm biased, but you kind of look at the world a little bit differently, where it's not just a single option of like, oh yeah, this is what you do.
Yeah, that's 100%. That probably comes down to why one of the reasons why you're really good with the hectic strategies. But you say they're not hectic, but I feel like they're hectic for me.
I do it every day.
All right, this one's coming from a guy who's a really good operator, Clint. I was on his podcast the other week. So he's written here, what's your key metrics you look at? I'm interested to know your wages as a % of GP. It's something I've been researching since my recent trip to the USA. Wages as a reporting on wages as a % of GP.
Depends on the business industry. Like every industry will have a function on different metrics. One of the easiest ones, which I always tend to look at, is gross profit margins. So you always want probably at least a 30% margin.
Okay,
Because it's pretty difficult to operate a business if you're running below that. And then also one of the other key ones is labor utilization. If you're running below 70%, you're going to have problems.
What does that mean? Can you expand on what labor utilization means?
So in terms of if you're in the kind of like a service sector, if you're billing people's time out, if they're not 70% productive, you're probably burning money.
Yep.
Or you're not going to be profitable.
Okay.
So just, two broad numbers, which I always look for.
Yeah. So that's actually maybe a good thing to think is if people have multiple, 20 or 30 staff or whatever, that might be a good report to bring up, like, to know, like, okay, when do I need to hire someone? When do I need to fire someone? In a way, like, if they're getting below that 70% across the board, you might need to be, I need to remove someone from that.
Yeah, potentially. Yeah. It depends on it depends on the business and what you're trying to achieve. Scale costs money. So you may have some more admin people to kind of support what's happening up above. And this is why, it's having a conversation as to what's actually happening at the top line with your revenues and what's actually happening with the variable component of your revenues in terms of cost of sales.
Yeah.
If that's looking a little bit weird and you're not making enough gross margin across the business, then how are you going to support the fixed overheads? And the fixed overheads are all your kind of operating costs in terms of rent, admin overhead, the cost of doing business in terms of licensing and all the other bits and pieces, and then your own wage or your own drawings, depending on how you're structured. So it's getting that interplay correct.
Because I think that's one thing people don't often realize as well, including myself a while ago, is like, you got to consider that your operations manager or your plumbing supervisor who sits in the office all day and doesn't directly go and make money, that's actually an overhead. That's a business operating expense, isn't it?
Yeah, it is. Because they're not billable.
Yeah, they're not billable.
Like they're not producing any revenue.
Yeah. So that's the way to look at it, isn't it? Anyone in the business who's not directly producing revenue is actually a business overhead, or to be looked at as a business overhead. Would you say that? Or
yeah, that's the way I look at it, because it means that your gross margin needs to be able to recover that.
Yeah.
Because they're not producing it, like they're not billing anything, so your margin will need to be able to cover that wage every single month. If you're not, well, you're going backwards.
That's one thing I've personally struggled with a bit in this business. We spoke about it, I suppose, is like, like growth, scale costs money, and like you do get to a point where to grow, you can be really, really top heavy, and you actually it can ebb and flow a lot. Like you're actually not making any money because you suddenly got a really big overhead because you want to springboard to the next point, and you can't do that physically without having that admin level of stuff to even get you there.
That's right.
So it's a bit like, oh, I'm making a lot of money, I can hire and then it's like, oh god, I've got so many people.
Yeah,
but if
it's
I go here, I need that.
There's nothing wrong with it as long as you acknowledge and kind of go like, well, that's part of the growth journey. I want to step off the tools and I need to hire a general manager, which is going to cost me X. Well, yeah, your profitability is going to go down because you're not working anymore and you've added another overhead. And, your job is then to bring in more work because all you can really then affect is the top line. And if you get more top line and your margins are correct, then you'll be able to recover those costs and you'll be able to start to scale further and further out of the business. And it then turns more into, a bit more of a machine rather than it being kind of like you're constantly in it and having to fight fights every single day. So that's why scale always costs money, and you're just going to kind of go like, well, you're better off. I always find that you're better off reinvesting back in your business. You're going to make more money out of that than putting it into shares. What are you going to make out of shares? 10, 20% maybe? Yeah. Business, you're going to make 30, 40% returns if you're continually, finding those little angles or scaling your way out or trying to create something which is sellable as well.
That's a good, important lesson as well. Is like, when you're putting money back into your business, you have to look at it like it's an investment.
Yeah.
You could be putting that money like buying a car or buying shares or whatever, but also spending it back in doesn't feel as sexy because you're not removing it and buying something else that, getting a receipt for it. But you're like, that is an investment, isn't it?
Yeah, massively.
Can be a really good return on investment if you
that's
operate well. Yeah.
Especially if you get off the tools and you're not having to do the work anymore and you've got a good GM and, life is good.
Yeah. A fella asked me this question. What's your ruling on fringe benefits? Got a few boys, utes and trucks. Always tried to steer clear of it, but want to know of people that have it in place and make it simple to work out. I don't know if that actually, does that question make sense?
Fringe benefits is never easy. It's tax which I think most accountants hate dealing with because it's complex. It's a slightly different accounting period because it's from 1st of April to 31st of March, and there's a lot of complexities around it. And it's trying to navigate those complexities. You know, you look at client gifts or client entertainment or in meals, which occur at the office. You know, there's ways and means of kind of structuring that so that you actually get the tax deduction for it. Even with motor vehicles, I tend to always approach it from an operating method perspective rather than statutory. So there's different ways of calculating it, and it's not straightforward. I wish it was. It's probably the most complex tax that we have to deal with within this ecosystem.
Okay. Best place for someone to learn all the ins and outs of starting a business in terms of bookwork and accounting when starting their own plumbing business or any trade business?
Oh, that's a good question.
'Cause that is bloody hard. That is a good question, actually.
In terms of, I would say Xero's got a lot of really good videos in terms of how to actually drive the accounting software. And they've got like a bit of a university which you can kind of go through to kind of teach you the high level sort of concepts of what actually goes on.
Yep.
You know, pretty much 95% of people nowadays use Xero.
Do they?
Yeah. It's you don't see too many people using MYOB anymore. MYOB is really good in terms of inventory management and complexities around that. The rest of it, it does what it does.
Okay. Because one of the questions I was going to ask you is like differences in accounting packages. That's a massive question I always get. Is like, do I go MYOB? Do I go Xero? Do I go friggin' QuickBooks? Like,
recommendation is Xero because the majority of time, you know, I could do a crash course for someone in half an hour and they get most of the concepts. I can't really do that with most other accounting packages. Like, you know, when I first started out, there wasn't Xero, and you'd have to spend at least a day with someone to train them on how to use MYOB.
Yep.
And it's just like, that's a fucking long time. And that software wasn't built in an intuitive way that anyone can kind of pick it up and drive it.
Yeah.
So things have come a long way now, and yeah, it's great. You know, you can kind of do your own bookkeeping or bookwork, and you can drive it yourself.
So Xero. All right. He's written, keen to hear about tax write-offs for personal driven vehicles while at a company.
Can you read that question again? Well, yeah, we'll do that.
I'm keen to hear about tax write-offs for a personal driven vehicle while at a company. So I'm guessing maybe he's saying that he drives his car around and is off his own back to jobs.
You would probably claim that as a kilometre rate. So the ATO provides up to 5,000 kilometres with a reasonable kind of substantiation, and that you can use that for personal use. Otherwise, you would need to kind of go down the logbook method of substantiation, which is a lot heavier.
Yeah.
So you'd need to keep a 12-week or 16-week logbook, and then you'd figure out what your percentage is, and then you times it out by the cost that you're incurring.
Okay. Oh, this is a good one. All right, I'll read you the actual conversation we've had. Can haircuts be tax deduction?
No.
And then you wrote, does my head in and no one can give me a direct answer? And I wrote, so this is a serious question. I wrote, yeah, man, I want my haircuts as a tax deduction. I'll take everything. And if I need a haircut to look presentable at work, it should be a tax deduction.
No. No.
Okay.
There's literally rulings on that one.
Okay, all right.
Yeah,
all right.
Don't push it.
This one, we've covered it. How do I pay zero tax? Is another question I've got.
Don't make any money.
Yeah, that's
so
simple.
anything under probably about 23 grand, you're not going to be paying any tax.
Okay, so just make less than the minimum wage and you won't have to worry about it.
That's right.
I've got another one here. This is from Perla Plumbing. As a sole trader, and my office is my rented apartment and storage is my undercover car space, do I have any way of deducting any rent, power, or internet as a business expense?
Yeah, you do. There's a floor area calculation that you can do based on how you're using the space that's accepted by the ATO. So you would need to get a floor layout, figure out what you're actually using, and you can times that out by your rent.
Okay. That's it, man. Thank you. Really
Easy.
appreciate your time. Next time you come on, I'm going to have some really difficult questions. I think
I like the one, how do I pay zero tax?
that's what everyone wants to know, man.
Yeah.
Well, everyone thinks, Google pays zero tax, and
Oh, they
Do
still
they?
pay tax.
They still pay
They
tax.
still pay tax.
that's a very common thing everyone thinks. It's like,
It's gotten better. It used to be kind of a complete rot, which they were doing, but yeah, they have tightened up on it. You still it's still a bit weird that they make billions off of us and it goes off to Singapore or somewhere else.
yeah, definitely. Okay, mate, thanks so much for coming on.
Yeah,
I
no
love
worries.
you, man.
Pleasure.
Thank you so much. See ya.
Sweet.
Thanks, bro. Thanks for tuning in to another Plumify podcast. Make sure you follow us on Instagram, TikTok, YouTube, LinkedIn, and all the usual podcast platforms.